Hello viewers, we'll be going over WTI crude oil, and in this video we'll be going over the day-by-day probability model, how we find the models, and the forecast for WTI crude oil. So back to the technical analysis, today we're up 3.8%. On the 1 hour chart we are approaching to positive MACD and we are near overbought RSI, and on the 4-hour chart we start to see a convergence on the 4-hour MACD, and we start to see a convergence between the 9 and 18 moving averages. As long as we close above the 18 moving average on the 4-hour chart, this reversal is intact. And as for the daily chart, if we expand out, we just got out of oversold RSI, and there's still a bit of concern on the daily MACD. We are nowhere near convergence on the MACD, and we still have the 9-day moving average that act as our immediate resistance, and we do need to close above it in order to have a firm reversal from this downtrend. So I'll mark the 9-day moving average as our immediate resistance, and that is around the price of $52.11. That also coincides with past support, and since we're below support level, that now act as resistance. So marking support that dated back to October 3rd of last year. And as for support, if we were to reverse down lower, the next support that I see is the support made earlier this week on February 4th, and that is around the price of $49.40. We still have that as our immediate support. So if we were to reverse down and head down lower, that price movement is roughly around 3.7% to the downside, and to the upside is around 1.8% to the upside. So back to the day-by-day forecast model. So what we have here, as the day progresses, we have a slight favor to the downside with a 57% chance of WTI crude oil heading down between 0 to 8% down. And on the extreme case, we have a 14% chance of crude oil heading between 8% to negative 16% down. And on the other hand, to the upside, we have a 14% chance between 0 to 8% up, and on the extreme case, 14% chance again between 8 to 16% to the upside. So let's head to the day-by-day forecast. So this model is now available in the link below, so do check it out. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to May 16th to August 12, 2008. And let me point out why these two charts are similar. So what we have here in the current trend, we start off above the middle Bollinger Band, and then we proceeded to take a slight dip below the middle Bollinger Band at this instance. Afterwards, we continue to the upside, touching the upper Bollinger Band once more. So after that, we proceeded in a downtrend. So we'll mark that averaging below the middle Bollinger Band. So we have those points there. And in the trend in question, we start to see a similar pattern as well. Start off above the upper Bollinger Band. Let's just mark all the instances where we touch the upper Bollinger Band. In between those two, we take a slight dip below the middle Bollinger Band. And then finally, we average below the middle Bollinger Band right towards the end. So what we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was May 16th to August 12, 2018. WTI crude oil manages to climb up 5.7%. So we do see an upside to WTI crude oil. So back to the day-by-day probability model, it marks under the 14% chance between 0 to 18% to the upside. Again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.